VC's Perspective, global practice for successful projects.
Thank you. Please say who you are, what you're working on right now, but also give us a little bit of background about how you came to be where you are, whether it's your road into VC, whether it's your road into blockchain and crypto. Give us a little bit sense of you, your origin story, like every other superhero. You're a superhero, right?
Well,
okay. Now you can introduce yourself.
All right.
You start.
Okay. So I guess at least some of the older people in the audience might recognize a company called 𝐒𝐿. So I was a seed investor in a company called 𝐒𝐿 way back, like 20 plus years ago, at a $7.5 million USD valuation. And then it was sold to Sun Microsystems for $1 billion. So that was the first unicorn out of Finland. That's how I got kind of into tech. I got into kind of an open source. I got into software industry really deep. Now, open source, in my mind, is kind of it's kind of the backbone of blockchain, crypto, all of that stuff. Even though it's bringing another level to that. So that's why I'm here.
That's right here. From Finland.
From Finland.
With $1 billion.
Yeah.
But
living in 𝐒𝐻𝐻 nowadays.
Living in 𝐒𝐻𝐻?
Yes.
Interesting. I have yet to go there. I need to go to 𝐒𝐻𝐻. Right.
I have a guest room.
Okay, folks. See ya. Do you have beer? No. Okay, go.
Yeah. So I focus on mainly two things. On the GDS consulting side, we do investment.
No, but we're gonna hold on. Back up. Since I messed it up, who are you?
Oh yeah. Origin is coming. Yeah. So my name is Gagandeep Singh.
That's what I said.
Pronunciation. No.
Okay.
Okay. So and then the focus on GDS consulting is investment consulting, and then I have a media firm as well. So we focus on Web3, Web2 marketing. And my origin story with blockchain is it's pretty basic and pretty funny. I was in college at that time, 2015, and there was a quiz happening, and I had all the answers correct. But one question was that I had it wrong was a symbol of a currency, and they said, which currency is this? I was like, I've never seen this symbol. And later I got to know from my seniors that it was Bitcoin. So that is when I got to know about it in 2015. And back then, probably if you search what Bitcoin is, the first page also wasn't showing you the correct results. So that is when I started researching about it, got into the space, invested, learned about it. So yeah, that's my kind of the origin story.
Very good.
Yeah, I'm Eugene from the Arta Venture studio. So we're like a mix of a VC and incubator. And I got into crypto like a lot of other entrepreneurs. We kind of, we got bored in the industries we were working. We had some money and we decided, okay, we'll go somewhere we can waste all of our money and like lose our sleep. And that's how I got into crypto. But basically we decided to apply our entrepreneurial expertise into a Web3 space, which is exciting, innovating. You can try a lot of stuff that you can't in traditional industries. That's how we got there.
By the way, the reason I got into crypto is my computer got infected with ransomware and I had to pay a ransom. And at that point, Bitcoin was worth like $100. And whoever infected my computer, I want to thank them. Because of that ransomware, I ended up buying Bitcoin and shifted my career to become a crypto lawyer. So whatever scumbag that was, enjoy it. Because I've made so much more money because of you. So anyways.
Did you buy antivirus?
Huh?
Antivirus.
No, actually, I used AppLocker to lock it down on my computer so that no unwhitelisted program can ever run. And now, seriously, I deployed AppLocker and never happened since. So anyways, thank you, ransomware. It's a great investment. Get infected any day. Okay, so what can I say? All right, so look, I'm old. I need my glasses really to read all these questions. But let's start from the beginning. There's best practices, but there's also flaws or red flags or things that go wrong. What doesn't make a successful project work from a VC perspective? What lets you clear it out of the queue and know not to proceed? I think you mentioned something about pitch decks in your questions.
Yeah, well, I think that one of the things is product market fit. It is like product market fit.
Okay.
So it's all about like kind of you get people so excited about tech, whether it's blockchain, whether it's AI, whether it's quantum computing, whatever. They think that it's going to solve everything, but it's not. So they start using kind of buzzwords in their pitch decks when it doesn't make any sense. And obviously, any VC will see right through that. So find a way of like kind of making yourself clear as to what actually customers want. And it sounds silly, it sounds obvious, but I mean, looking at hundreds of decks, thousands of decks, a lot of times.
So you need more than pet food on the blockchain.
Yeah,
you actually need a,
look at the growth of the market. Look at the stats from here. Look at the stats from there. I don't care. Is there product market? Has someone bought something from you? Has someone actually paid for your product or your tech or your service? Most of the time, well, they are kind of. But the market's huge. So you don't get the answers, and it's astounding. It should be obvious, but it's not.
Should be. All right. So what's an anti-pattern for VC investing? What's a red flag? What's a no-no?
I think if I stick to the pitch deck point, and I also see the time as an issue, so I'll just mention one point. That is, they often focus on just the product and the technology that they have, rather than addressing what kind of a unique problem they're solving, and then how they're addressing the pain points in the market. Certain companies, they just think that launching a product based on a particular technology will get them money, and this has happened in the past in the bullish market and so on and so forth. But I think they really need to address the unique pain points. Otherwise, it doesn't make any sense. I think.
I kind of call it like entrepreneurs being in love with the technology. They're in love with the technology, and that's it.
And I think expanding on the Mikko's points, we're going very early stage, so we normally don't have startups that have sold something to someone, but that's the problem. Sometimes they don't know where they need to sell. Like, there is no business. They have only tag. We have this, like 3-layer multi-chain bridge, but who's going to use it? So for us, like the main thing, because like USP, that's something we can work out. That's something that we can find along the way when developing the product. But if you don't even know like what kind of business you're building, for us, it's like the red flag, because you don't know what you're doing. You just have the moonshot idea, but it costs nothing at this market. Absolutely nothing.
So let me be a little bit controversial. I think there's companies that have a cool tech, develop, play around, get users, and then figure out their revenue model later.
No, but it's not.
That is a thing.
It's not about the revenue model, but just basically like who are you going to target? Who are your users are going to be? Like, not how you're gonna like get revenue from them, but basically who are you targeting? Like, where are you going with this product?
Well, let me kind of push that one. I mean, people often say that blockchain is a solution without a problem.
I would have kind of like, I mean, what I've seen, I've been working around here like for the last day and a half. What I've been seeing, there's like companies that are making tons of money, but they have.
That's why we're here.
Yeah, but they don't really have good tech. I'm seeing like a big opportunity over here for disruption. I mean, the stage over here is small, the AIBC one, but the problem over there is like, a lot of the companies are kind of, in my mind, they are kind of a bit comfortable. They've done like semi-easy tech solutions, and they are selling. They are making money today, but if you're looking like 1, 2, 3, 4 years down the line, the outcome is looking like and feeling like the same. So, how do you differentiate? How do you find your USPs? Go with tech. So find something unique tech-wise.
And can I jump on that point? Sorry. On that point, the blockchain is the solution without a problem. Tell that to IBM that's been developing private corporate blockchains for ages now and selling a lot of it. So it's just, but they found their niche. No one knows about IBM building blockchains, but they're like earning a lot of money from that because they're out there in the corporate world.
Beautiful.
And I think I want to add to the profitability point that you were mentioning.
By the way, just a quick comment. I'm a blockchain and crypto attorney. It's definitely a solution for me. I'm just kind of poking fun at the people who say that.
Oh yeah. So the profitability point is, yes, like VCs do focus on the growth and the valuation aspect of it rather than focusing on profitability. But I think it depends on the technology aspect as well, because certain technology and certain projects they bring in a lot of like industry disruption, and especially in Web3 that happens a lot. I'm not keeping like token prices in mind. I'm talking the technology in general. And then, but of course, 100% we have to keep in mind that there can't be like continuous injection of capital. There has to be a profitability, like a clear path towards profitability at certain point of time, and not just based on the valuation game.
And let me stick with you for a minute. So one of the questions you submitted was really interesting. It's how do you risk mitigate and do due diligence on your projects? Yeah. I think that's a very key question right now. especially in an early stage project. So
100%.
please.
I think the key metrics, the one that I've learned with making a mistake about 3 years ago, is the team. Just giving you an instance, and this will also cover all the points. The token metrics were amazing. The team were amazing. The team wasn't amazing. The mentors, advisors, everything was amazing. There was a new thing that they were coming up with. It was pretty unique. And I misjudged the team. So I misjudged the founders and the characteristics. So that actually took the project down. There was ample of funding with them. Everything was going perfectly fine, but the decisions that they were making, or the attitude, or the egoistic attitude that they had, took the company down. And that is why key players in the team left the project and everything went down. So for me, team always plays one of the top priorities when it comes to evaluating a project.
All right, hold on. Let's stay with that for a second.
Yeah.
Knowing that the team took it down, but knowing what you know now, how could you identify in advance so you wouldn't repeat the same mistake?
100%. So that comes down to their background checks. It's kind of a pretty risky thing to invest in someone who's just getting started and it's going to be their first gig. It has to be someone who has an expertise in the field that they're trying to achieve, or they have the right guidance and like proper mentors and advisors, not just the ones who are in for the tokens, who are in there giving their hours daily. So I think that kind of plays a crucial role now.
I think it did actually. It's at least in early stage, it's even a bit simpler than that. Yeah. It's just kind of like, okay, well, if I meet you, have a long lunch, dinner with you, we have talks and so forth.
I'm staying at your place in 𝐒𝐻𝐻𝐬.
Yes, and you stay at my place in 𝐒𝐻𝐻𝐬, and I feel, okay, I can trust you. Then I'll invest in you. But the thing is that, I mean, no matter what kind of background checks you do, I mean, especially at certain age, everyone has some kind of skeletons, some kind of failures, typically, unless you are like some very strange creature, alien.
Who's never tried anything.
Exactly. So you have failed and you have succeeded. You've done both things. So, do you want to bet on this person? Do you like that person? And do you want to, I mean, I'm not proposing or anything, but I mean, do you want to kind of like date this person or like get like semi-married to this person for the next 5 years and try to do some good business? If the answer is yes, go for it. That's early stage investing. Later stage, then you start getting more into metrics. Like you have all these numbers that you play around with. But early stage,
it is still the team. I mean,
it is still the team. Because I mean, most likely, because you're going to pivot like 3-4 times. Most likely, if you're in tech business, the business models are going to change. The ways of you making money are going to change. So, is the team capable of handling the changes? The top people, if they are, cool. If they are just kind of stuck with whatever they are pitching you initially, forget about it.
Let me go to Eugene. So risk management, diligence, what
So
are
I
your
think
thoughts?
everyone's talking about the team, so I think there are a couple of other points. I think that VCs, especially in Web3, they need to have either internal tech expertise or a good outside partner, because in a lot of products in Web3, like smart contracts are the pinnacle. So you need to make sure that whatever is being developed, there are no back doors, because we've seen that a lot, it's either on purpose, sometimes it's just bad coding, but you need to be there. And I think, the other way to mitigate the risk, especially if you're taking a big part of the equity, is in terms of, when the team wants to take it down, maybe you can take over the project, just replace the team. But you need lawyers, to put the contract in place to make that process possible.
Oh no, lawyers.
And I think another aspect is the legal compliance side of things. So that also plays a crucial role while investing and assessing on the risk mitigation part.
To get to another question that you raised, and thank you for submitting some very good ones. What role does an ecosystem or environment play in terms of a VC investment? Is it a nice to have as a key? What actually makes an ecosystem around a project work? Is it needed?
I'm pretty sure, but kind of an ecosystem, as in you're saying, the partnerships that they can have in place. That
was your question number 4.
Oh, no, it's fine. But that's fine. So it's like the kind of partnerships they can have in place, and the kind of mentors they have in place, advisors they have in place, the kind of ecosystem that they're creating in order to grow the company. I think that's what kind of plays a crucial role. And then 100% strategic partnerships. That is pretty relevant nowadays. And in terms of how resilient the market is, you need to have proper startup mentors, advisors. Yeah, so that's kind of the ecosystem.
Let me reframe it differently, and then I'll pass it to you. But does a VC have any sort of expectation, or is one of the best practices having your portfolio companies somehow strategically aligned with each other, or is that not something that's really necessary?
In my perspective, it's not a deal breaker or something, but I think some VCs might focus on a particular mandate, but yeah, many are pretty agnostic in terms of that.
I mean, I would say that all the VCs pitch, all the accelerators pitch, they are bringing added value. This kind of service, that kind of services. If you're an entrepreneur, look at the term sheet with the lawyer, make the right terms. If you're happy with the money and the terms and the valuation, trust the money that's coming on board. The services can be an additional bonus. Don't expect to get anything. There's a kind of a old joke, I guess, that went around in Silicon Valley is that, okay, that if you're kind of on a growth path, there's like two types of portfolio companies: the ones that get invited to Aspen and the ones that don't. So it's like, the ones that are heading towards the unicorn and exit status, they are all there. They are all networking. The ones that are struggling, that really would need help, they don't get the invites. They're kind of I don't know.
I feel like you're going a little too extreme.
Well,
I think you're being, to be honest, I think you're being a little bit anecdotal. If you're going to give up board seats, preferred stock, and a big chunk of your exit and control, and maybe get squeezed out like it didn't happen with Cisco, I think you're not just looking for the check. I think you're looking for the Rolodex, the relationships, and the mentorship.
Yeah.
Hopefully,
yes.
Yeah.
But that's the thing is the problem is that a lot of these investors and us, that's what we are pitching. We are providing you with the Rolodex. We are providing you with mentorship. We're doing all of this stuff besides the capital. That's why you should give up so much equity. Don't trust. I'm talking against myself in that sense. So, but it's like, don't give up that much equity in exchange for the potential advice that you have no contractual.
Sure, that's always a good idea. But I think hopefully VC input provides value. That's kind of the point.
Sure. So the question was about the network of the VC, right? Because we kind of drifted from that.
You can take it where you want to take it, but the initial question was, does ecosystem matter? When you're building a Web3, when you're building a blockchain, does a community matter? Does the VC's own ecosystem matter? Or is that just marketing fluff, but you got to just go your own path?
Well, I think it depends a lot, So, so if you're talking about VC ecosystem, that's the thing. If you bring in VC on board that has a huge network, they will bring a lot of value. If you're building something, it depends on what you're building. Like if you're building B2C, then you will be building like a huge ecosystem around you. We'll be connecting. If it's B2B, it probably will be much more smaller. So like when you're talking community wouldn't matter that much. It will be more about the solutions complementing each other. So I think it's very different depending on what you're building.
Sure. And then having, I'm from Dubai. We're both from Dubai. There's a rich local ecosystem. Does that matter?
I think 100% the local ecosystem matters. And I think another point that projects can focus on is why do they do hackathons or certain offline activations, building their community. I think that all really matters at the end, token metrics, value of the token price, 100% that plays. But how you're building your community and what kind of token utility you're providing always plays a good, crucial role. So building the community is a key thing. And then, for instance, we just launched Near in Canada, and we are building the community from scratch over there. So, and now they're growing way ahead of other blockchains in the Canadian region. So 100% it plays a role. Yeah.
So, and kind of cycling back to something before, which is, solutions without problems. What matters more, growth or profitability? You want to go green or you want to go big? Green like cash flow.
Well, depends on the type of an investor you have on board. Some are going long term, doing longer term things, and some are, so do your DD on the investor. Depends on what you need. Some are like looking for like short-term kind of an overturn, and you should be happy with that. And it's also like, I mean, going back to the previous question, yes, ecosystems do matter. It's a brand thing. Yes, so if you have a right type of VC on board, it's a brand thing. But on this one, yeah, it's depends on the investor.
I think I answered this part previously. So for me, it's okay to focus on the valuation side of things as long as there is technological innovation happening in that particular company. But at the end of the day, you really need to have a proper path set out in terms of how to achieve the profitability aspect of it, because there can't be continuous injection of capital, and this is what we are seeing nowadays as well with various big capital firms, that they're going down and the investments are pretty much becoming zero because of the same reason. So yeah.
But I mean, sometimes I don't think Instagram was profitable up to the moment that Facebook bought it. Maybe the profit is the sale.
Exactly. So 100% companies and VCs, they can focus first on user acquisition, like giving up their short-term profitability aspect. But then, as I said, there needs to be a path. For now, it can be okay. They can take their market share, users, drive the growth of the company. That's fine. So yeah.
Being very concise, I think the generally VC model is about the growth. You kind of want to grab the biggest chunk of the market you have, especially in the innovative industries where the market is like basically empty. So I think you're focused on the growth, obviously keeping profitability in mind down the road, but it's not like the most important thing when you're investing, in my point. I
think it's almost you don't want your burn rate to get out of control or get ahead of your investment, but so long as it's not.
You need to have enough money to get to that point of profitability or sale.
I'm going to just have moderator privilege. 10 seconds. Final thought.
Okay.
5, 4.
Getting out of making an exit, always difficult. Timing of that is difficult. You need to align it with your
Okay, 10 seconds. Go.
I think for future, just focus on building a strong network of mentors, advisors, and strong team. And then also focus on maybe the sustainability side of things, because that's kind of becoming a major thing. So whatever you try to do, bring in that aspect. It kind of entices the VCs now, no matter what their mandate is. So, yeah.
Good mention. Sustainability.
Yeah, so I think, we're getting to the point where crypto is not a wild, wild west anymore. We're getting to the point where it's becoming like another industry, which is exciting for me as a VC, I think.
Fair enough. Okay, let's give a big round of applause, please, for a wonderful panel. Good job, everyone.